talk about, should I say, comparing 2011 to 2012. We've seen this year the market is up just less than 1%, like a third of a percent year to date. And same time last year, we saw the market up about 7.5%. But as we know, last year, it was a very strong start, but a very weak finish. The market was down 16%. How do you see things progressing from here on in 2012?
I think one of the biggest differences has been foreign inflow. I think if you look at the start of last year, a lot of the increase was through foreign inflow from foreign investors investing in the market. I think that's been moderated a bit because of problems in their home market. And so it's more moderate start. I think as confidence continues to build in the market and the reforms of the NSC continue to go forward, I think you see hopefully the retail investors coming back, local retail investors coming back to the market, and more foreign flow, especially from portfolio investors coming in.
Now, of course, the banking sector has been on the spotlight, and many people are saying that is a sector that will outperform this year. News flow yesterday suggested that UBA was supposed to hold an analyst call, but for some reason that was postponed. And now that leads me to talk about bank earnings season. That should come up in another few weeks. What are your general expectations? What do you think will be the themes that will really set this banking season apart, earnings season apart?
I think first you have the top players. Everyone's going to look at First Bank, GTB, and Zenith. Those are the stellar players in the market. They've shown strong results in last year up to Q3, and they expected that will go forward, especially likes of Zenith and GTB. I think next they're going to look at. I think the banks are going to make a lot of interest income from those who invested heavily in FGM bonds, especially in Q4 last year, because yields went up. So they'll show that kind of. So people will strip that out and strip that out of their earnings and look at really their cost-income ratio and the net interest margins, and see whether they're still having healthier net interest margins, because that'll show strong growth going forward.
So obviously there will be a lot of focus, like you mentioned, on efficiency, cost-income ratios, etc. But let's talk a bit about the impact of IFRS. It's coming into play fully this year. December numbers will be IFRS standard reporting. What's the likely impact, especially on a quarter-by-quarter basis? To what extent do you think this is going to impact the type of numbers we're going to see from the banks?
I think in terms of the numbers affecting the banks, I think in terms of IFRS, the banks have to show more exposure on certain things like pensions, the effects of pensions on their balance sheet, and also in terms of splitting things like net interest income, splitting where exactly it's coming from, and the effect of that. So I think people will be able to drill down deeper into the banks to see their underlying growth synergies. I think that would then show the players who are actually making income from things like FGM bonds, yields, and those that are actually making income from underlying strong businesses. So I think it will be very good for analysts and to show the really strong banks that have an underlying strong business there.
You mentioned federal government bonds, and on one hand, like you mentioned, the higher interest environment means that yields on those are higher. But on the other hand, if you're looking at their historic portfolios in bonds, that is another concern for analysts. That to some extent, some banks may have to take some mark-to-market losses on the bonds. What are your thoughts on that?
I think they will. I think and under IFRS reporting, it makes it harder for the banks to move bonds within various different buckets. Because what some institutions have done in the past is that they move bonds from their trading portfolio to their hold-to-maturity portfolio, and because they don't have to market that. Right. Under IFRS, that'll be more difficult. So I think you will see a true reflection of banks' actual trading performance.
But do you think it's going to be significant, this mark-to-market impact? So, analysts seem to be divided on that point. Some think it's a key risk for the banks. On the other hand, people think it's not something to worry about.
I think it's a key risk. I think it will be significant. I think if you look at the proportion of banks' income that comes from things like FGM bonds, it's quite significant for a number of banks. So it will be a key risk.
So how does that impact your rating of the banks this year then? Are you one of those that think that banks will outperform? Many people are saying that is where there's value in this market today.
I think this year there'll be a true split in the banks. I think you will see the top tier guys who outperform, who will continue to do well. Many of them have been following IFRS principles since FMC been announced 18 months ago that people should move towards IFRS. So they're already prepared for it. I think the others who have been slower, who have not been prepared, especially some of the banks that have been taken over, I think they'll be slower in that process, and I think it will show in the results.
You just mentioned banks that were taken over. AMCON, and I spoke to CEO late last week, and he did mention that the process to sell those banks starts with the appointment of financial advisors. Now, we know that the process is still some way ahead, but then again, it really brings to the fore the fact that we might see some new investors coming to this market. He did mention that there are some foreign interest. What are your thoughts on that dynamic and how it might impact the banking sector this year?
To be honest, I think the impact would be negligible. And those banks were taken over by AMCON in September under, some would say, controversial circumstances. Now, to say less than 5 months later, you're appointing new financial advisors, starting the process all over again, will call them into question. And anytime we hear about these banks, there's always this foreign interest we see. And until actual official bids come in and we see who these foreign interests are, if there are any, I think analysts, from what happened last time, when everyone stated there was so much foreign interest, but when it came down to bids, there wasn't that much. I think people will wait and see.
All right, let's move back to the banks. And I want to talk a bit about UBA. Like I mentioned, they did indicate that they were going to speak to analysts yesterday. What do you think they might want to communicate? Some say that it's a bit too early to release results now. The results probably come out late February, mid-March, thereabouts. So what do you think are the big issues around UBA that one should be considering that might be the topic that they want to discuss?
Yeah, in general, I think it's too early for them to come up with financials. With UBA, normally comes up behind Zenith, GTB, and First Bank, normally around March, April. So I think it was a bit too early for that. I think the issues around UBA might want to communicate, maybe an update on the African strategy, because that's a key risk that analysts have always been talking about. So there might be an update there. I think there might be some changes within the senior management. Maybe they want to announce some changes within senior management in terms of strategy and people coming in and moving out. I think it will probably be around one or two of those things.
Share price obviously took a huge hit last year, so everybody is looking forward to that. Final point, Dangote Cement, we're hearing that they should be commissioning the Igbesia plant tomorrow. A very significant move, in my view. What are your thoughts on Dangote Cement today? It's the big heavyweight in the Nigerian market. Do you think this is going to be an outperformer this year?
It should be. I mean, if you look at, people estimate the cement demand for Nigeria to between 17 to 19 million metric tons. Dangote Cement with the new plant is going to be at 20.25 million metric tons. So in theory, Dangote alone can fill the whole demand for Nigeria. If you add the likes of Lafarge, Ibeto, and other cement companies, then Nigeria should be exporting cement. And so I think it is definitely a big deal, and Dangote has taken a lead there. And I think the big question is, do they have the efficiency? They definitely have the capacity, they have the efficiency, and that relies on how they generate power and how the companies are run. I think when we start to look at the financials and analyst interviews with the management, that will become clearer.